Hello traders, Gary Wagner here. It is 11:25 in Honolulu, 5:25 in New York on Tuesday, 9th day of July 2024, and this is the evening report for gold and silver.
Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. We're looking for two things, really. One is just more good inflation data. We need more good data so that we can be confident that what we're seeing is really, that's where inflation's going.
Chairman Powell's first day of testimony was interpreted by investors as positive, with U.S. equities gaining fractionally, the dollar strengthening, and gold trading marginally higher. Gold, basis the most active August contract, is currently up $4.40 and fixed at $2,367.90. Silver also gained fractionally, up 14.5 cents. That is a net gain of 0.46%, taking the most active silver futures contract to $31.05. And although gold and silver both gained fractionally, the fractional gains occurred with headwinds provided by a fractionally higher U.S. dollar. The dollar gained 0.12%, taking the index to 105.113. The fact that gold did not continue the strong price decline we witnessed yesterday. Yesterday's price decline was predicated on profit taking. That being said, we are trying to position ourselves from the long side before Thursday's inflation report vis-a-vis the consumer price index. Currently, it is anticipated that Thursday's report will show that inflation continues to cool to a 3.1% level year over year in June, which would be down from the 3.3% that came in May. On a technical basis, what is most noteworthy when we look at recent price action in gold is that gold closed back above its 50-day simple moving average. It had broken below the 50-day moving average on the 7th day of June. That is the day that a jobs report took gold $80 lower and remained below that average for a little over 3 weeks. Gold has managed to effectively open and close above that price point for the last 3 consecutive trading days. Although it has had lows that have dipped into and below the 50-day moving average, on all 3 instances, gold did close above it, and that is significant. That tells me that the short-term market sentiment for gold is once again bullish. Today, we did send out a trade alert recommending that you place a buy limit order at $2,349. That is roughly where this dashed line is. What we are looking to achieve is to position ourselves from the long side on one of the intraday lows, the wicks on a candlestick, prior to Thursday's CPI report. The rationale behind it is if early forecasts are correct and the report indicates a further cooling of inflation, that would be the third inflationary report in the last 3 months, confirming that inflation continues to cool and is in fact on a trajectory to the Fed's target of 2%. Typically, we look at inflation levels moving lower as something that historically would have been bearish for gold, because gold has been considered for years to be a hedge against higher inflation. However, now investors are waiting for inflation to cool before the Fed begins a series of rate cuts, and rate cuts would be bullish for gold because gold doesn't yield any interest and makes fixed incomes much more attractive when interest rates are sitting at 5% and higher. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.